unravels.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Good afternoon and welcome to my podcast. My name is Phil Grande, CEO of philsgang.com, an education group since 1998. Okay, let's get started. So the market, as you can see, is struggling. But again, it's for the people who know about increasing the money supply, increasing GDP, they know what's going on. They know what to expect. Everybody who's sitting around now always is hearing, oh, we're going to have a crash now. We're going to have a crash. 3 months ago, if you said that, you'd be stoned. They'd stone you to death. But now, more and more people on all these fake business networks, gee, I think there's going to be a crash. Looks like a crash because the economy's getting worse. All this bad news about the economy, so it's going to crash. No, it's not. No, the market doesn't crash because of the economy. They got that wrong. They got that wrong. Markets don't crash because of the economy. The stock market has little to do with an economy. Most people don't understand that, but it's the truth. And so the stock market and the economy, remember, are different. They're totally different. Everybody thinks they're one. And the stock market does not identify our economy's health. Everybody thinks it is. Like if stock goes up, oh, we're doing good. Stock goes down, oh, the economy's not doing good. It doesn't identify the health. It just doesn't do that. And the stock market and the economy are just so different. And if you look at the stock market, again, if you think of it this way, there are 33 million businesses in America. 33 million, think of it that way, 33 million businesses. Now, the S&P job is to track the future earnings way out in the future of just 500 of 33 million businesses, just 500. Are you nuts? So that alone tells you, when you put it in perspective, there's little bearing on the economy when you're just monitoring 500 to 33 million businesses. The economy, on the other hand, it just measures our standard of living. And how do they do that? Well, what's the economy consist of? Oh, well, production, right? Jobs, and how we consume. If we have a job and we're making good money and we can consume. So the economy right now is waving red flags. I mean, it's unbelievable what the economy is saying right now. You know, we just, the job openings hit a 10-month low, right? Job losses, we've had the longest streak of job losses since 2020. And filings for unemployment checks, in the last 8 months, 250,000 people filing for unemployment checks. What are you, nuts? And what do they tell you? Our economy's doing great. It's strong. It's the best economy we've ever seen. What are you, nuts? 250,000. So manufacturing jobs fell by 42,000. We thought we were going to have 42,000 to 12 million. 42,000 to 12.7 thousand. I'm sorry, 12.7 thousand. 42 to 12,000. That's insane. Construction spending had the biggest drop since 2008. Heavy truck sales, that's so important. That's what everybody, not everybody, but most people in business look at. How many trucks are they selling? How many, Freightliner, for example. Everybody looks at Freightliner, right? How many trucks are they selling? Because if they're not selling trucks, they're not hauling. If they're not hauling, our economy is really bad. And then you look at the diesel fuel, and diesel fuel sales are tanking. So, very bad. Construction spending is the worst. It's been since 2008. And bankruptcies are up. A record 26% in 6 months. And business bankruptcies up a record 40% in 6 months. But yet the stock market is waving a green flag. Matter of fact, every time we get bad news, the stock market seems like it hits another all-time high. That's all we hear every day, another all-time high. Because it's not tied to the health of the economy. The stock market, we don't tie it to the economy. Forget that. I mean, just look at our housing affordable gap. People can't afford a house. It's at 57%, meaning 57% of the people who need a single-family house who want to buy, they can't buy it. Because the median household is $462,000. That's the median price of a home. And you need a $125,000 job. We don't have a lot of $125,000 jobs. So the average price of a house is $462,000. The median income is two people working in their families, about 70 grand. So the gap's about 57%. But they're telling us how great the economy is. It's not true. So why is the stock market doing so well? Well, here, if you look at my chart, we keep making all-time new highs in the money supply. Think about that. Every time we announce all-time new high to the S&P, all-time new high to the S&P. Remember, we have an all-time new high in the increase in money supply. Increase in money supply is the most powerful thing there is out there. But it also makes inflation go up. And that's why Powell's been ignoring inflation. He knows that. But we need the money supply to keep the stock market going up. Now, remember, I've said this a long time ago. I will never bet against the president. He knows how to rally the money because he knows how to control through economic policies, through his policies, the policy him and his team makes to increase the money supply. So he can shove that money right back into the stock market for stock buybacks. See, people think he has no control of the money supply. No, he does. Through his policies, through his economic policies, he sure does. And they can move the money around. That's why he wants to get his own guy in the Federal Reserve as quick as they can. Then he really control the increase in money supply. So anybody thinking, wow, this market's ready to collapse, it's ready to go down. Oh, it's going to go down. We're going to have the biggest stock market crash in the history of this country. But not now. The other thing people forget about, too, you go back in history and look at stock markets and new presidents, they have a long-term marriage. The first term. You go look at the history. Every first term, the president and the Federal Reserve, they have a good relationship. And if you look at just the president, never mind the Federal Reserve, just look at the president and the stock market. Go back and look in history. It's always been a marriage, a good marriage. Because everybody is looking for a change. Because you get in that new president, everybody's hopeful that things are going to change. He's going to do things that piss everybody off. He's going to fix it. So he gets enough time. He gets about a year. Now, if you look at my chart here, if you look at the stock market, I'll just do this for you, show you how it works. If you go back to 2001, the dot-com days, okay? They started to do a little bit of stock buybacks, but not really a lot. Okay, it really started right here in 2008. This is where it really started. So let me do this here. This is really started right here, 2008, stock buybacks. If you drew a line, it mirrors that red line. So without this red line, and look how we just had this big move. We now have a money supply that's hitting a record. That's how they're pushing the market up, with money supply. So if you hear all this bad news in the stock market, God, there's so much bad news out there, it's unbelievable. Construction spending is down, manufacturing's falling apart. Are you kidding me? Housing's falling apart, everything's falling apart. People can't get good jobs. People are getting laid off. 250,000, almost a record amount of people now have signed up for unemployment between January and now. Almost a record, not quite, but almost a record signing up for unemployment. But every day you hear on TV, hey, things are terrific. But it doesn't affect the market. Always remember, the stock market has nothing to do with the economy. It has all to do with, can we get more money supply in the system for stock buybacks? For stock buybacks. And so you have this wonderful marriage in the first year with the president and the stock market. They work together. So I don't see a crash coming. Now, obviously, we'll spot it because we follow the money. That's what you have to do. If you learn how to follow the money, you will never be surprised by a stock market crash. I used to laugh when everybody used to tell the story about 1987. Gee, I went out to lunch. I came back at noontime. The market was down, 500 points or whatever it was then. Well, that's funny because we started looking to short the market. We started that in January. Okay, and so we were so far ahead because you can tell when the market is going to collapse because first of all, money supply starts drying up. That's number one. That starts drying up, and the other thing that starts getting hit is the margin debt. That starts getting hit. The other thing that starts getting hit, okay, is when you start seeing yields starting to fall. And that's not good. When you get that 10-year Treasury yield starting to fall, falling yields, rising yields, when you have yields that are rising, that always implies a correction. Always implies a correction. Your falling yields, people jump into the stock market. When they see falling yields, they jump in because they start buying tech stocks. And that all comes from money supply. So they can rig the stock market. As long as you have enough money supply, you can drive those yields down. You can drive those yields down. And that's what they do with this money supply. So that the growth stocks, the tech stocks are going up. So without money supply, we'd be nowhere. The market's not going up on fundamentals. What are you, nuts? People who listen to these jibber jabbers on TV are nuts. I don't know why they listen to it. They're just lying. I mean, I see fundamentals is what's driving the market. What are you, crazy? Fundamentals not going to drive the stock market. What's driving the stock market are tech stocks because they have plenty of money supply. If you have money supply, you can keep those yields down, and lower yields love growth stocks, which are tech stocks. Nobody cares about trailing PE ratios anymore, or forward PE ratios. No one cares about price to sales, price to book. Who cares? And nobody cares what the CEO is doing or his management team. Who the hell cares about the CEO or their management team? Okay, let's see how good they're doing. We'll measure how good they are, what's the return on our assets? What are they getting us for returns on equity? Are you kidding me? Nobody cares about that. Tech stocks have gone wild. And you can see today, if you go, here's another thing that's really interesting. Right here. Our dot-com bubble is our AI bubble. And here's the proof right here. I'll put it in red because it's hard to see it. But let's take the blue line, okay? The light blue line, I'm going to put red over it just so you can see it, okay? that line right here is the dot-com, and this is where it started to collapse right there. Remember the dot-com days? And it collapsed, right? Just went straight down. Well, let's look where we are today. All right, when you look where we are today, we are right here, right at this point, right here. This is where we are right now. We're right at this point, right in here. I mean, that's insane, right there. We're almost catching up to where the dot-com crashed. So that's what I'm saying. I don't see a crash. We may get a little correction, but I don't see a crash between now and I'm watching. I'm more comfortable with watching the money supply, and I'm comfortable watching how close are we getting to the dot-com crash with AI. And they're not far apart. That's when I start worrying. But you always got to be on guard. That's why you need to.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com. Or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang Podcast. Remember, we have been established since 1998, teaching folks just like you, the retail investor, how to trade stocks. And the biggest problem investors have, retail, they don't know how to sell short. That's so dangerous. And they don't know how to follow the money. They don't understand how the market works. What they do is they follow the herd instead of following the money. You got to follow the money. It's always the money. And it always starts with the increased money supply. That's where it is, right there. They're not going to tell you about that, but that's where it is. Increased money supply. Now, this thing with stock buybacks used to be illegal, and it should be illegal. They should make it illegal, because it really distorts the market, and it puts a lot of people in danger. There's going to be so much money lost with this crash coming. It's going to be huge. Now, I don't expect the crash to come until sometime, maybe in the first quarter of January 26, because we're still in that honeymoon phase. You know, and everything you hear right now is how we have the greatest economy in the world. But we don't. We don't. If you look at rental, always go look at rental and look at meat. Rental and meat, right there. Those two prices right there. Then look at health insurance. Look at auto insurance. Meat, rent, health, auto. We're not getting a break in any of those. We're not getting a break. I mean, there's tremendous evidence as to our inflation. Cutting rates is inflationary. That's right, cutting rates. Money supply is really inflationary, increased money supply. But one of the biggest problems is with stock buybacks, you create an environment of boom to bust. You create an economy that is going to crash. There is no way it's not going to bust. There is no way on this earth it's not going to bust. You just got to identify when before it happens. People who are surprised by a crash means they are not equipped to be in the stock market. And your brokers, they don't know when it's going to crash. Are you kidding me? They're too busy stuffing you with stocks that their company bought. And then they bought it first. And then they stuff them in your 401k. And they make big spreads. Most of those brokers have no clue when the stock market's going to crash. No idea when it's going to crash. But the people who know are the people who've been in this business for a long, long time. You got to be through the crashes to understand how they work and to follow what you're supposed to be following. When you listen to these TV shows, these financial shows, they got you looking at everything that you should be looking at. And when you listen to this crap right here,
it's not a bad economy or anything like that. We've seen.
It's not a bad economy or anything like that. Not a bad economy? What's wrong with this guy? Not a bad economy? Are you kidding me? We got historic bankruptcies, personal and business since January. We got all these fake job numbers. And by the way, we're not the only one to do these fake job numbers. You know, UK does the same thing. They did the same thing. Not to the degree we did it, not that big, but they do the same thing. All these fake job numbers. Because remember, you want your fake job numbers to get incentive. You want people to feel good. If they have a job, they feel good. And they see jobs going up and we're not losing jobs, they go spend, they have confidence. What they don't know, like right now in the United States, they don't see underneath the surface what's happening to our jobs. And all you have to do is go look at the JOLT, J-O-L-T, and you'll see exactly what's going on with our jobs. Horrible. People can't find a good job. Jobs are dropping. But stock buybacks is a boom to bust culture. That's the problem. That is the big problem, a boom to bust culture. And it's so unfair because the people who make all this money, okay, those are the CEOs. Those are the congressmen. Those are, the senators, representatives. They're making all the money. Guys on Wall Street, the 1%, they're making money. My God, when over a 5-year period, if Apple's buying back $460 billion of their stock, $460 billion, I don't know how many shares that is, but when you reduce the count of shares in your company, the stock goes up. Earnings go up. Earnings go up. But you haven't had any sales. Sales push earnings. So how the hell do earnings go up if you have no sales? Because you reduce the number of shares. Apple, $460 billion. Meta, $177 billion. NVIDIA, they don't need any money. Apple doesn't need any money. I don't even know why they're doing it. NVIDIA, $82 billion. Google, $271 billion. But remember, when you do these stock buybacks, it hurts these companies because what they're doing is they're not putting money into business investment. They have replaced, starting in 2009, actually 2008, but we'll go with 2009, that's when it really started. They replaced business investment with rigging the market, financial engineering the market, with stock buybacks. They wanted to push those stock prices up so fast, they didn't want to do it the right way with earnings. You put your business investment, buy new machinery, new equipment, new IT spending, then you wait and you start working, then you get more people in, and some production increases, sales increase, but that takes time. They didn't want that. In 90 days, they wanted the stock market, especially the banks, in 90 days, I think they went up like 72% after the crash. People got rich. And also money, if you're in gold or any kind of commodities, you made a lot of money in the first 90 to 120 days. Wall Street made a fortune. People who knew what was going on made a fortune. And none of that money went to people who had houses in trouble or businesses in trouble. So it's a boom to bust economy, stock buybacks. And remember, our economy is driven by the middle class. It's their consumption. And when they don't consume, we're screwed. We're screwed. So what's happened is we're replacing business investment with business debt. And corporations have historic debt. Corporations are obsessed. They're obsessed with stock buyback because the CEOs and the board of directors and the biggest shareholders are getting so wealthy. But not the employees of the company. Do you know that it's about 5% of the people, the public, that has stocks outside of a 401k? It's about 90%, about the top 1% controls about 90% of all stocks. There's not many individuals that own stocks outside the top, 10%, we'll use that, the top 10%. So the whole market has been financially engineered for stock buybacks through money supply increase, and it's just been the easiest market in the world to trade. For 9 years, hell, go back 12, 15 years. So the problem comes, though, it's going to stop at some point. I don't think it's going to stop now. I don't think it's going to stop, October. It could, but I don't see any signs of it right now. Now, when you look at the economy and you go, oh my God, look at this economy. Look at the jobs are terrible. Look at the people getting laid off. Oh man, we're in trouble. Look at the price of food. No, the stock market's going to go down. It has nothing to do with the stock market. It has everything to do, there's no business investment anymore. They replaced it with corporate debt and government debt. You know how much government technically can't loan money to companies for stock buybacks, but they get around that. Okay, going through third party, stuff like that. And all the stock buybacks keep doing, it keeps reinforcing this unstable economy. So you keep hearing about the unstable economy, but they look at you and say, what are you talking about? Look at the stock market. What are you talking about? Everything's fine. Everything's great.
Current environment just reinforces the benefits of holding stocks right now.
Yeah, sure. Just hold all the stocks you want. Just hold them. Buy and hold. Buy and hold. And these are the people that are going to get hurt because they don't know. They don't know the signs. What are the signs when the market's going to collapse? I just gave you one here. You can look at my chart right now. Look how close our AI bubble is now to the dot-com bubble. Remember, our AI bubble is our dot-com bubble. Okay, look how close it is. Now, the other thing they lie about is our economic growth. Boy, are they lying about economic growth. It's unbelievable, okay? If you look at our GDP, this is another important one right here, GDP. They've been lying like hell about the GDP. So look at, this is a chart here. Look at the contribution to GDP, tech. Look at tech, software and tech. Look at the contribution to GDP. And so so it's all about software and tech. And how's that contributing to GDP? Because of stock buybacks. So everything is all around stock buybacks. That's it. So again, as I said, we got this boom to bust economy, and we just got to be very, very careful. And again, the stock market keeps waving all these green flags. But the other market, the economy, is waving red flags, but nobody cares. Nobody cares. So that's what's really, really dangerous. So the GDP, remember, what they do is make sure they cheat with the jobs. Like they cheated with the 1.1 million jobs we didn't have. They said we did, but we didn't. The greater number of hires, the more your GDP goes up. And that's what they do during an election. The UK follows us doing the same thing. They're falsifying the number of jobs. Biden falsified by 1.1 million. UK in the same time period falsified their jobs by 500,000. They're doing the same thing as us. So what they did in the UK, 50% of the private sector laid off workers. So the government rigged it so it looked like they were all hired by the government. So the private sector lost half of the jobs in the UK. And so they come in, so the UK turns around the government, and it appears like they hired all these people when they didn't. And so it's the same thing here. That's why our GDP looks so strong. Everybody, boy, look at the GDP, how strong it is. Bull! It's representative of all those fake job numbers. They haven't adjusted those. They haven't adjusted those down. They adjusted the numbers, but they didn't adjust the GDP. We cheated by 1.1 million. The UK had only 6,800 new jobs, and they lied, brought it up to 516,000 jobs. They're using our our formula, I guess. So remember, the stock market is not about the economy. Don't forget it. Right now, it's mostly all bad news, but they make all bad news seem like good news because we keep going up higher and higher and higher. Because we got the record money supply. So as long as we keep cheating on the job numbers, our economic GDP growth, they got that story. As long as they keep lying about the job numbers, our GDP will grow. As long as they keep manipulating the money supply, and the president can manipulate the money supply through his policies. They'll tell you, no, he can't. He has no control of the money supply. He sure does. Look it up. He sure does. He doesn't have direct access, but his money supplies, his policies do. So, again, watch your yields. Watch your yields. Because your falling yields, even though we're seeing them drop. Here, let's get rid of this here. This is unbelievable. Look at this software and tech. Look at how it contributed to GDP. It's unbelievable, all fake. Watch your yields. Watch your yields and watch your money supply, and you know exactly, or pretty close, when the market will correct. Join my gang, free for 10 days. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.